don't care how good your chart looks. If you're doing these three things, you will never succeed at trading, period. And the painful part is almost every new trader does all three. Today, we're breaking down the three habits that absolutely guarantee failure in trading, and more importantly, how to reverse them starting today. These are patterns I've seen over and over again from beginners who just started last week to traders who've been stuck at break even for years. And if you're doing even one of these, it's probably the reason you're not being profitable. Let's get into it. All right, number one, and this is the big one, not setting stop losses. Look, I get it. I've been there. I've done that. Everyone thinks they're the exception. Everyone thinks their trade is different, but it's not. So you're in a position, price moves slightly against you, and you tell yourself, it's fine. It'll come back. And unfortunately, sometimes it does because that creates a really bad pattern. But the one time it doesn't come back, that one time can wipe out weeks, sometimes months of gains. Why do traders avoid stop losses? They don't want to be wrong. It's simple. They think that giving the trade more room to breathe is helping. They're afraid of getting wicked out. But here's the truth. A trader without a stop loss is not a trader. They're just a gambler. Stop losses are not optional. They're the single most important tool you have to keep your account alive. So instead of skipping the stop loss and hoping your trade comes back your way, what should you do? First thing, set your stop before you enter a trade. If you're placing your stop after you're already emotional, it's too late. Don't commit to a certain price target before you have a stop loss in place. Use invalidations, not hope. Your stop should be placed at the level where your idea becomes wrong, not where it feels comfortable. Risk a percentage, not an emotion. Professional traders learn to control their emotion, and they risk the same amount every time. Most losing traders risk whatever feels right in the moment, or they're trying to revenge trade or something like that. Stay consistent with your trading amount, and you'll stay consistent with your profits. Which brings me to that second point, which is getting emotional and revenge trading. So, getting emotional, especially revenge trading, if you've ever said any of these things, listen closely. I'll make that money back. The market owes me. It can't end today in the red. I should have won that trade. I'm taking another one. That's the voice of revenge trading. It's the fastest path to blowing up accounts. I have literally done that multiple times. Here's why. Losses cause an emotional chemical response within the body. Your brain immediately shifts from strategy to survival mode. And when you're in survival mode, you'll break every single rule you normally would follow. Your position size gets bigger, your entries get sloppier, you start chasing candles instead of setups, you stop seeing the chart and start seeing your ego. You're no longer trading the market, you're trading your anger. And the market doesn't care about your anger. So what do you do instead? Have a stop trading after X losses rule. 2 losing trades, a certain amount for the day you've lost, whatever it is, have a rule in place and walk away from the day. Professionals know when to stop. Amateurs keep swinging until nothing is left, and that's the worst thing you can do. Stand up, physically move, get out of the house, go for a jog, take the dog out, go get some food or whatever. Change your physical state interrupts the emotional loop. It may mean for an entire day, 2 days, a week, whatever it takes, and then come back to the drawing board and get the next trade. You can also journal your emotions if you like writing things down. One of the most powerful things you can do is write down what you felt and how you felt it and what caused you to feel that way so that you can make the change next time whenever you start to feel that way. Focus on execution, not outcome. A good loss is better than a bad win. If you follow your rules, long-term math works. If you don't, you're dead in the water. I call number 3 the silent killer, and that is trading without a high probability strategy. This one is sneaky because a lot of traders think they have a strategy. They don't. They have random indicators, YouTube snippets, a few lines on the chart, a feeling, a setup they used that once worked and they haven't tested it since. If you can't explain your strategy step by step to a stranger, then you don't have one. If you don't have a clearly defined entry point, take profit point, and stop loss, it's not a strategy at all. A real strategy answers those questions and these. What confirms your entry? Where is your stop? Where are you going to take profit? How often does this setup win? What is the average loss versus average gain? You need to know ahead of time what you're walking into so you can know what to expect and know when to cut it loose. If you don't know the answer, then every trade you take is just a guess. And guessing is not trading. Again, it's gambling. So how do you fix not trading with a strategy? A couple of things you can do is backtest your setups, not once, not twice, 100 times if that's what it takes until you're comfortable with it. Track your results, keep a journal, log each trade you took, what the strategy was, what your profit loss was, how many days it took to, or hours or minutes, whatever time frame you're on, how long it took to enter and exit the trade. Only take trades that meet those criteria. If your setup isn't there, don't trade. Don't force a trade. You can't force a trade. The market doesn't care what you think. The market does what the market does. We have to play ball with it. So sitting on your hands is actually a skill. If you can be patient and wait for your trade to set up to get to you, you'll be very well rewarded. Refine, don't reinvent. You don't need 20 strategies. You only need one or two that work consistently to be an extremely profitable trader. So reality check time. And let me be brutally honest. Successful trading is not about predicting the market. It's about controlling yourself. That is the number one thing you have to do. Keep your emotions in check. Approach it as a business, not a hobby, not something personal. It's a business and it has a strict business outline. Stick to those parameters and you'll be fine. Most traders don't fail because the strategy is bad. They fail because they won't follow it. They get out of the way. They let their emotions get in charge. Your psychology, your discipline, your risk management matter more than anything else. You can have the best strategy in the world, but if you don't use stops, trade emotionally, or take random trades, you'll lose almost every single time. Don't worry. If everything I just said sounds like I was describing you, you're not alone. There are millions around the world that do this exact same stuff every single day. I used to be one of them until I honed in on my discipline and controlled my emotions and allowed myself to become a better trader. So you're not alone and we can help. If you found this helpful, hit the like button for me. It helps my channel and lets me know that you want more videos like this. Also, if you want a deeper training, examples, real setups, and live streams, check out the Anthony Lee Premium Discord, where we break down technical analysis, Bitcoin setups, altcoin opportunities, and give you the structure you need to trade like a professional, not a gambler. Also, every day, Monday through Friday at 9:30 a.m. Eastern Time, we go live for the U.S. Market Open, and we almost always take a trade live on stream so you can follow along with us. Subscribe for more trading psychology, strategy breakdowns, and real-time market structure videos. Thanks for watching. Stay disciplined, stay focused, and I'll see you on the next one.